Kimberly-Clark is home to some of the biggest household brands, Kleenex, Cottonelle, Huggies. But with the unemployment rate near 10%, how do you convince Americans to keep buying the name brands? Let's ask the CEO. Tom Falk runs Kimberly-Clark, and he joins us here in studio. Tom, appreciate your time this morning. I imagine you get this question a lot from your investors. You had an investor day yesterday. And what do you say when people are maybe looking to buy private label stuff these days?
Well, boy, we make diapers and feminine care products and adult incontinence products, things like Huggies and pull-ups. And if the diaper leaks, that's a big problem for mom. So you've got to deliver value, and our brands do just that.
So have the best brand out there. I know that's one part of the story, but then there are the other players in this market, Procter Gamble. I can't believe I'm talking,
of them, John. Yes, thank you.
about Pampers, but they've got some new product that they say is the biggest innovation for Pampers since it was launched. And you've had to field questions on this too, the Pampers versus Huggies battle. How's that going to play out, do you think?
Well, I think the good news for CEO Mom, as we like to call her, is that both branded diapers, Huggies and Pampers, have got some great innovation coming, and that's just going to make her life easier as she cares for her baby. So we've got some great stuff coming on Huggies, and we're used to competing with P&G everywhere in the marketplace.
And do I understand this correctly? You guys, for example, with a product like Depends, you'll introduce color versions of it. Like, is that really a differentiator that someone would buy a colored Depends product?
Well, most consumers want to be in something like their own underwear for as long as they can. Obviously, if it feels like an institutional product, that's not a good solution. So the more normal we can make a consumer feel as they're going through and dealing with some of those really tough issues, the better they're going to be loyal to our brand.
So that's the battle on the shelf. But something that people might not know as much about is the commodity cost story. You've said oil, where it is right now, you're okay with that.
It's tracking with our expectations roughly for the year.
But pulp prices is a totally different story. We've talked about the earthquakes in Chile. We've talked about what I believe was in Finland, a port strike. Those two markets make up something like 12% of pulp sales around the world, do they not? I mean,
that's about right. Yeah, I'd say between Chile and Finland, they're each about 5 to 10% of the world pulp supply.
You've been CEO for a long time. Have you ever seen the pulp market this tight before?
Well, it's interesting. In about 1995, pulp was bumping up against $1,000 a ton near the end of 95. We did the Scott merger right around then.
Right.
By April of 1996, pulp was back down to $600 a ton. So I don't know if that's going to happen this time, but I sure hope that these situations in Chile and Finland are short-term and turn around later in the year.
You've been looking to cut costs. We were just showing your stock price before. Not everybody on the street is a big fan of the shares right now. Goldman Sachs has you on their conviction sell list. Now, you're seen as one of these dependable companies, nice dividend, all that stuff. Why do you think there are some that are concerned about your story?
Well, yeah, obviously commodity costs are an issue, and so there's a factor on that. We've also got to show we can get the top line growing again. We saw some good top line growth trends in the fourth quarter, really an uptick, but we've got to see that continue into 2010.
We mentioned dividend. You've got pretty healthy cash flows. That helps that part of the story. And you also spoke yesterday about possible acquisitions, maybe spending in the neighborhood of $1 billion. Tell us what you might be looking to buy.
Well, as you look at 2009, we actually did 3 deals. We did a Jackson Safety deal, which was early in the year in the safety product space, and then we did a couple of healthcare deals late in the year. And so looking at those high margin growth opportunities in healthcare and in our KC Professional business would be 2 areas we'd look. We'd also look for some consumer opportunities that could be tuck-ins.
So very quickly, healthcare, and with the developments out of Washington this week, you think that's beneficial to your business?
Well, I'd say in the long term it should be. We obviously, having more people covered will mean more procedures being done. We also, a good focal point of our business is helping reduce hospital-acquired infections. And one of the things we saw in the cost controls earlier this morning was that they're going to start to penalize hospitals that cause those. So if we can help prevent that, we're going to be that much more valuable a partner for our hospital customers.
Tom, thanks for your time this morning. That's Tom Falk, the CEO of Kimberly-Clark.